Hello everybody, welcome to Trader Merlin Show. It is your Wednesday edition. Happy hump day. Yeah, strange trading day out there as I saw your posting from Steven there. Yeah, we had most of the Magnificent Seven was down today and markets still look rather decent. Not a bad day in my opinion, although NASDAQ just kind of break even. Today's show, a little bit different than what I had planned. I received multiple questions about chart patterns. One specifically, I think from Ken, I'll have to look it up here, asking what my favorite chart pattern is. And, you know, we could talk about that, but I spend a lot of time on this program talking about chart patterns. And as some of you have probably adopted some of my strategies and the way that I look at different price patterns. So I wanted to just explain kind of the basics of chart patterns and then go into a couple other questions from viewers today, including Les and Judy and I think Ken as well. So let me dive right into that. We'll start there. Yeah, it was a wonderful afternoon to you too, Rob, and I hope it's an even better week. Yeah, Margaret saying very good day for Bitcoin. Very good day for Bitcoin and Ethereum. If you guys want, in the XLT general session this morning, I did talk about quite a bit of stuff. It was actually a good session for those who were in there. I do want to talk about the Ethereum challenge. I think I'm actually writing an article for Bar Chart on this one because Ethereum, in my opinion, has just kind of resurged from the dead. And it's not that Ethereum has done anything, it's that the industry has chosen Ethereum. It's kind of picked winners here, and that may be the big winner. So we'll talk about that one a little bit later on. Let's get into the chart pattern piece here, and then we'll get into all the other goods for today. This is the wrong show number. It should be 1178. This is I used this for yesterday, but I had Scott McCormick on, so I had to delay it by a day. Now, Jim asked me, what's your favorite chart pattern and why? I think I've actually got this question before in the past, and I have to be fair, I don't necessarily have a favorite. And the reason I did the show title as Understanding Chart Patterns is I think everybody in this room understands, but anybody who might be new to this program, and by the way, thank you very much. We just broke 7,000 YouTube followers, so maybe that's due to your talking about the program and sharing it and spreading it around, or maybe just the algorithm, but 7,000, cool. I'd love to get to 100,000, but I'd have to do like serious marketing for that. I've never done marketing at all for this program, and maybe down the road, that'd be a good one. So back to our discussion. Chart patterns and everything they represent is simply behavioral analysis. When I look at a chart like this Microsoft one, it's like, this is all behavioral analysis. This is the psychology of people and really just what are their thoughts and feelings about, in this case, Microsoft or the dollar or Bitcoin, right? That's all this really represents is what were they thinking? And as my mentor told me many, many years ago, this represents everything that is known or knowable about a specific security or asset, whatever it is. So when you look at something like, let's go to something that we all know, let's say Meta. Right? The price chart here is, in theory, representing all that is known or knowable. And for most of us, we don't have access to all of the information about a company, right? We are not privy to the board meetings. We're not privy to all the intricate memos that get sent between the different division managers. And we just hear things through third-party news that comes out after it's already been filtered through the market. So generally, we as retailers are very late. However, when you get that major news, that drives price. If there's an earnings announcement coming out, quite often that information is leaked way before you and I get to hear the actual numbers of that earnings announcement. So to me, as Margaret says, baked into price. And that's why I put so much emphasis on price charts, not only because it does reflect as much information as humanly possible, but it also reflects the emotions of people. And certainly at moments in time, we can anticipate what people will do based off of an emotional move. And that's why I'm a big fan of chart patterns. So Jim, you asked, what's my favorite chart pattern and why? I guess I'd have to break it down into two separate categories. First one would be just candlestick patterns, right? What type of candlestick patterns? And these are a whole bunch of different ones here of shooting stars and morning stars and bearish kickers and two crows. Look, you can take any candle, any two candles, or any three candles by themselves, put them together, and basically have any argument for a candlestick formation that you want. So I'm going to zoom this down just a little bit. I kind of had to zoom in on the picture there. Actually, bullish and bear flags are not my favorites, right? They're not my favorites. I would argue these ones at the top here. Oops. Let's go to there. I'd argue that my favorites are really these guys here. So they call this an inverted hammer in the upper left-hand corner. Sorry, upper right-hand corner. I can't even tell left from right today. That upper right-hand corner, inverted hammer or a shooting star. Now, a shooting star is the one that matters, and the arrows are what's important. Yeah, Big Eb knows mine. My two favorite for candlesticks would be hammers and shooting stars because of their simplicity, right? We can make this as complex and intricate as possible. But if you break it down to one candle, again, they tell you stories. And I would argue that all of them on the top here, from your dojis, right? You've got your two little dojis at the top. Dojis represent indecision. Don't know what's going on, right? That's great. That's Veer's favorite element. Okay, cool. You have the indecision candles. You have really big confusion candles where you have wide ranges, but not really giving you much direction. I like dragonfly dojis, gravestone dojis. Of course, it depends where they're at. A hammer could be a dragonfly doji if it's closing right at the top. A shooting star could be a gravestone doji. It just has to close right at the very bottom. So for me, Jim, I would argue that from a candlestick perspective, I would say a shooting star and hammer are my favorite just because of how simple they are. It doesn't take a genius to figure it out. And I can also very quickly, when I look at a price chart, like typically this is how I'll do it at the end of the day. I'm going to just run through and see, is there anything on this chart that looks appealing to me? There you go. So Tesla right now, on today's activity, it's a shooting star. It's not great. And the reason I say it's not great is because it's not at the highest point, right? It would be great if it gapped up today and had this little shooting star. But my rules are pretty simple. It does show weakness. The last 2 days, yesterday was what is called a hanging man. Today is a shooting star. So those are both bearish candles, apparently, according to Steve Nissen, who created the candlestick kind of style. What that tells me is that tomorrow, if we get an open on Tesla above 338.20 and it breaks down below that line, then you got a great shorting opportunity. And given the way the markets move today, that would not surprise me actually to see some sell-off in Tesla here in tomorrow's session. And it's not like that analysis took me a long time to do. I literally clicked through. I found that shooting star formation. I analyzed where it was within the context of the trend. I looked at its formation, kind of how those candles aligned going in there. And then I just made a simple rule for myself. And this is not in textbooks, by the way. This is just a Merlin rule about putting a line down below the low of the shooting star and waiting for it to open up above it and then move below. That's just my rule. You can modify them any way you want. That's not, like I say, not in a Martin Pring candlestick book or Steve Nissen candlestick book. It's just my way of doing it. And I think, at least for me, it removes so much overthinking, so much emotion. It's just, okay, if I get Tesla to gap up tomorrow and start to break down below 338.20, then I have a shorting opportunity. Now, when you look at these other patterns here, I do like haramis, I do like engulfings, but you get into really, bullish nesting lines or three outside up. I don't know. I don't like the complexity and to start to argue that, this must be a bullish pattern because of X, Y, and Z. Certainly there may be some truth behind these, but I definitely like to keep it as simple as possible. And as Rob put in the chat there, he says extreme zones where it reverse. Yeah. If you look at this chart here, unfortunately, we broke above this, this previous high from back here on July 21st. But I love it when you see a tail on a shooting star go up into overhead supply zone, right? Because it's giving you a second chance. Let's say, for example, I'm going to modify this. This is not exact, but let's say it looked like this today. Well, that would have been your first chance to go short Tesla, and now you're going to get a second chance if it breaks down below that 338 level. So, as Margaret says, location is very important. It's extremely important. If I have this shooting star formation down near the bottom, well, it's no longer a shooting star. It's called an inverted hammer. It has nowhere near the same value to me as after a long uptrend. And I guess if I was to break it down into its core principles here, today, this candle on Tesla had a long topping green tail. This whole thing was a big green candle all the way up to, what was that price at the high? 348.98. Just a giant green candle. And then for whatever reason, it came crashing back down and closed lower than it opened and right near the lows. This is actually a pretty bearish candle here. Now, it doesn't guarantee that tomorrow's session is going to be a sell-off, which is why you wait for confirmation, right? It's already trading lower in the after-hour session by about 33 cents, so no big deal. But that's just the simplicity of the rules. So for Jim, I like candles because I can create filters and scan for them very easily, but it's so easy for my eye to pick up on those patterns right away and just know that's a hammer or shooting star, the two simplest ones out there. And again, some of you might like other patterns on here. This is not, I'm not trying to sell you on anything, right? This is, you have to find out what works best for you. And in my short attention span mindset, it's got to be shooting stars and hammers. All right, next is you go into actual patterns and shapes. You know, these are pretty powerful too. And these typically take a lot longer to form, right? When I'm looking at these types of pictures, we're talking for the podcasters here, you know, ascending triangles, descending triangles, double tops, double bottoms, head and shoulders, wedge formations, bullish flags. You know, all of those have their merits. I think that they're all very, very powerful formations because they tell a story. Like, I would say on this list, my two favorite ones are the upper left here, the ascending triangle, which is a continuation pattern, and the descending triangle, which is a continuation pattern. And it goes back to, you know, my belief that the trend is your friend till the bend at the end. So if I'm in something that's trending up and I see it smack its head against a ceiling, but the lows are getting higher, I'm of the belief that this trend's going to continue, and we're going to see all of a sudden price move higher and higher. So I like those ascending and descending triangles. They do take quite a bit longer to come to fruition. I think that's the more challenging part about those patterns is they could take some time to finally show up on your price charts. Now, unfortunately, because I do a lot of analysis here on TradingView, they don't have those types of filters, but you can go out to a wide variety of different sites to get information. Let's go to, you guys might know Brandon Wendell. He turned me on this site years ago called stockfetcher.com, right? Stockfetcher. Yeah, the W's and the M's, Rita. Double bottom, double top. Those are also very valuable, right? Do I focus on those? No, but if I see them, I certainly act on it. So let's go here and let's go to, price action. Does that give me, no, I want to price channels. Let's go to candlesticks here. And I'm going to show you, let's just go, because of the way the market moved today, we'll do a shooting star. Now, this is bad because it's already scanning and filtering for something that's $5. I would never do a shooting star on a $5 security. That just doesn't make sense. So we can go full results here. I'm going to change this from $5 to, let's say, $25. And now we'll fetch the stocks. And so it has a couple of them here. Seagate Technologies, STX. And I never trust the scans. So I'll go to STX. That's not a shooting star. So its filter said there was a shooting star. That is not a shooting star pattern. Absolutely not. Let's go to, I'm not going to do the 1 month T-bills because those are skewed. These are all T-bill programs. These are so weird the way they're designed. So none of these are going to actually fall into a shooting star category for me. But sometimes you do get some great trading ideas out of it. Another site you can use is FinViz. Again, I'm trying to show free sites. I know there's many different other ones here. But you can go through FinViz, and there are usually, man, they changed the site on me, but there used to be, let's go home, scroll down here. You can see it's got some predefined patterns over here. Like here is a descending triangle. Okay, I'll click on descending triangle. And then, you look at this, and that's not a descending triangle. This is a bond product. It just has a cyclicality to it. Forget it. Would you call this one down here, CTRM, a descending triangle? Not really. Plus, it's $2. I'm not touching anything under $2. Now, GLPI. Okay, GLPI has been making lower highs, the same lows, although it did kind of breach it back here. This one is actually of interest. So let's go to GLPI. You have to use $100. This does look pretty bearish. I don't see a clear, solid line. This tail that broke down below on April 9th kind of ruins the base of the triangle. But we could go to these low points here we've established over the past couple weeks. Clearly, it's making lower highs, and 45.30 seems to be a line in the sand, and that could be a potential trade there. I say could be. Obviously, you need to do a little more research on that one, but that definitely could work. What else do we have here? I actually like the CEP one, because it looks like a SPAC because it was a $10 security. Let's look at CEP and see what that looks like. CEP. All right, and I'll put a line right across these lows that it's been bouncing off of quite a bit. $25.57. Lower highs, it looks like it's getting really weak. And I'm pretty sure this is a SPAC because it started off at $10 and kind of been stuck there for the longest time. This one looks like a great potential short opportunity. However, I am not going to touch any SPACs. I'm leaving that stuff alone, even though this has got over a year track record. I just don't like SPACs. They're just too manipulated. Anyway, I'm just looking at different things. Thinkorswim has scanners. Yep. And so does TradeStation. TradeStation has some pretty good ones, actually. But I just wanted to share that with you to give you an idea of, different trading ideas, or more importantly, for those of you who are kind of learning chart patterns, you can go out to something like FinViz and say, okay, show me some examples of some other pattern here. And I think it's important for you to discern, what's a wedge, what really looks good, what's really a channel, what's a double top, double bottom, head and shoulders pattern, right? I can bring up head and shoulders, and I'll tell you 9 out of 10, I'm going to say, nope, doesn't look like a head and shoulders. Like ULY. This kind of looks like a head and shoulder, I'll give you that, but its neckline is at $5, its head is at 18, which means if this came to fruition and actually hit the measuring object, this would be like a negative $13 stock. So that ain't gonna work for me. But most of these, they don't look like head and shoulders. I mean, come on. They've got some wonky algorithm that's just not quite working on this bad boy. So be very careful about what you see. And again, I think as Margaret says, my eyes are trained to see these patterns. Yeah, but it's taken some time, hasn't it, Margaret, right? You kind of look at the picture, the ideal picture of a pattern and say, okay, if I see a head and shoulders pattern, I know what the pattern looks like, but what does it tell me, right? I think that's the most important piece, especially with these types of patterns here, is what is it telling you? What is an inverted head and shoulders saying about the psychology of the buyers and sellers? Don't just say, oh, it's a pattern, it's a shape. It's telling a story. I mean, this essentially is a battle of buyers and sellers, and you can see who's winning, who's losing, and which direction it may go. And I think this is also the same thing with Japanese candlesticks. Don't delete that one, Oliver. I saw it quick. He says the hardest is a cup and handle. I would disagree. Look at this ascending triangle right here. You could argue that this ascending triangle in the picture on the upper left is a cup and a smaller handle. You could say that's a cup and handle, right? And I always joke that if you have like a third little dip here, well, what's that called? Well, it's a double-fisted Starbucks. Like, no, it's an ascending triangle. They all look pretty much the same. So, Jim, it's so hard to say what I like best. Here's what I have to be, in all honesty, here's what I like best about patterns. I have a clear view into all the information that's readily available on a specific market or security, and I can see the emotions of the buyers and sellers. Does it always work out? Do the patterns always work? Absolutely not. But again, this is a probability game. And if I can put the odds in my favor in any way, shape, or form, even 0.1% better than what I was doing yesterday by using a pattern, I think that gives you a tremendous edge over time. So those are the patterns I like and the importance of them. I think everyone should be looking at patterns, whether you're a long-term investor or short-term. It just doesn't matter. To me, they're all extremely important. All right. Now, let's go back to questions that came in, which is somewhat about patterns. And I think some of you were talking about it earlier today. Les sent this one. He says, quick question about Microsoft. It can end with a long answer if you want. And of course, I will be the controller of that one. Don't try to limit me, pal. So looking at the chart of Microsoft, what might be the possible direction for this chart? Will any of the inflation or retail news affect the price, or is it somewhat insulated from these reports? Well, let's take a peek over there at Microsoft. Oh, Mr. Softy, as Mike McMahon would call it, MSFT. So in looking at this chart right now, it's pretty damn impressive, right? It's a great looking chart, especially what happened from May through July 30th. Really it doesn't get much better than that. Notice that there were no like giant candles here. This almost feels like automated buying. Like they're saying, okay, buy 100,000 shares a day and just do it automatically. It just felt like that's what was going on. Then you had their earnings announcement, which caused them to gap up. And they had a great earnings announcement, right? They expected 337. They came out at 365. That's a good beat. But then we got the big gap up, and it's really been showing a lot of weakness ever since. Now, typically, I'm looking at this, and by the way, Les had mentioned the high volume, which is also, you can clearly see that on the earnings day. That's normal. In this picture here, the trend is your friend until the bend at the end. And I think everyone here would agree the trend is still up. Even though we've had this weird gap, huge gap up, and kind of slow retracement down. Today was ugly, now 1.64%. It still looks okay. We can bring up a weekly if you like, Margaret. Absolutely. Same picture though, right? You still have a great uptrend. You have a little shooting star, but this week is not done. right? Not done. We could see what happens there. But you had a monster shooting star 2 weeks ago in July 28th. Massive shooting star. So for me, look at the line I drew here on this demand zone. And let's just show you the fractal nature of markets. So I drew this based off the daily chart because I think Les is saying, which way do you think this is going to go? What can we learn from it? Well, ultimately, I'm looking at this yellow box, which is between 509.44 and 515.53. That's an area where it had a little bit of consolidation and then a monster imbalance. Price shot up. Looked great. Okay. That, to me, should hold. If we come back down and break this level below 509.44, then we have to question the trend. And there's a couple other kind of key determinant points. There's a low on this candle from July 23rd, which is at $500.70. And I'd argue if we get below 500, you could see some pretty significant downside move for Microsoft because the trend is broken. Now, does that mean you need to short it only when it gets below 500? No, not necessarily. I think if it gets below 509.44, there's your first shorting opportunity. Ultimately, I do think this will close the gap. We got really close back here on the 7th of August, and here we are closing that gap. We'll see what happens over the next couple days. It's up in the after hours, but I do think that we'll see it close that gap. Now, is it insulated from all of this news in retail? No. I think what's happening, and we've witnessed this in our discussions on the Magnificent Seven over the past couple days, certainly with Scott McCormick, is there is almost like this bulletproof perception of almost all these Magnificent Seven. Apple, Amazon, Google, Meta, Microsoft, NVIDIA, Tesla, right? All those Magnificent Seven seem to be impenetrable from a chart perspective. Now, we know that Tesla is a little bit weaker because of Elon Musk and his antics. We know that Apple has been struggling because of what's been going on with China. But what did I say when they first said they're going to give $100 billion? I'm like, bullish. We're going to see much more upside move here for Apple. They removed the major barrier and obstacle. So this one will probably catch up. But most of these been looking pretty darn good, except for that gap down on earnings for Amazon. But Google looking great, to my dismay. You have Meta looking great. Microsoft looks phenomenal. NVIDIA looks great. So all of these are looking fantastic, climbing the wall of worry. And I think most of it has to do with the anticipation of AI investments paying off dividends soon, right? All these companies investing massively in AI infrastructure, trying to build out their facilities to be the leaders of that, whether they're buying data centers or NVIDIA chips and just building out AI language models. They're all working feverishly to get there. And I think that the market is anticipating benefit from all that work for the past couple years on AI. My question has been, at what point do they overspend on AI? Right? What point do they buy too much that they're just not going to get the rate of return that they need for that money, and it's wasted capex expenditure? I don't know what that is, and I think that at some point we're going to see a bit of a pullback with regards to how much these companies are spending. But for right now, they're going crazy. They're spending about as much money as they can on AI, data centers, nuclear to power those data centers, and I think that's the big rush. So I think that they are somewhat insulated from it. Right? Just the trend is your friend till the bend at the end. With NVIDIA, for example, I've got this, that's not exactly the best line. That was the line that Big Eb had for his gains. I would argue if you get down below this low here on August 1st, which is 170.89, then that's probably a point where we could see some more downside in NVIDIA. But until we make some new lows, I just don't see it happening. All right, looks absolutely fantastic. All right, next. Judy says, sorry, I'm trying to rush through this stuff. We got plenty of time. Recent MicroStrategy price action is decoupling from Bitcoin spot price. Please let me know your thoughts, what your thoughts are. What does this mean for MicroStrategy's long-term price outlook? All right, well, let's bring up Mr. MSTR. Okay, so yeah, it was a pretty bad day for Microsoft, especially when you look at what happened with the price of Bitcoin today. I mean, Bitcoin was up 2.28%. Phenomenal, looking great. We're probably going to rip through all-time highs here soon. And you're wondering, well, why is MicroStrategy languishing here and down 1.14? Shouldn't it be rocking? Well, there are a lot of people who are concerned about MicroStrategy and how much money they are borrowing to prop up MicroStrategy. There are a lot of people who believe that this is kind of a Ponzi scheme, and I am actually somewhat in that camp. Not necessarily that it's a Ponzi scheme, but if you borrow money to to buy something to push the value of that something up. And when the value of that something goes higher, you borrow more against it. That does have a little bit of a Ponzi-ish aspect to it. So the other part here is that MicroStrategy has kind of stopped buying, right? They had a huge amount that they were buying, and they haven't bought much recently. I think that has people kind of nervous about it, because where are they going to get more money to buy more and prop the price up even more? There are also a lot of concerns about them being underwater and being liquidated. Look, their average price is like $68,000 per Bitcoin, so I'm not worried about that at all. But the chart definitely does not look that great. If we were to take MicroStrategy and add on, let's just do Bitcoin on top of that, you're right, Judy, in seeing the decoupling happening. Now, here it is since the beginning of the year, and you can see it's fairly tight. And there does seem to be a separation, at least over the past 3 trading sessions. But I'm not going to count 3 trading sessions as, oh, MicroStrategy is broken, right? It's just not going to, I don't think that this is the end. I think one of 2 things is going to give here. Number 1 is Bitcoin continues to move higher and make higher highs. And if that does continue, the MicroStrategy is going to turn around and start to rally and join that trend again, just like it has almost every single time. The other alternative is that maybe MicroStrategy is a precursor, kind of forecasting what may happen here. It's selling off because people expect Bitcoin to sell off, but I don't think so. I think that in this case, Bitcoin's the dog that wags the tail. I think what you're getting is typical stock market jitters. Remember, this is a traded security, so it's going to have a bit more volatility and does have the potential to be manipulated by market makers and institutions, because it's MicroStrategy. They can manipulate it. So I'm not so concerned. If you look at the sell-off that happened from July 16th, well, Bitcoin sold off too, right? They both sold off lockstep, but MicroStrategy's leveraged. Therefore, it's going to have a more exaggerated move up and down. In this case, yes, it looks like it's going the opposite direction, but it's done that a couple other times as well, where it feels like it's just going the wrong way. I think over time, this one will be fine. Yes, I do own MicroStrategy. We'll talk about that position here. I'm long MSTR right now. I've got covered calls at 410 on that bad boy, which will expire on Friday. All right, let me see. Les says it's almost a head and shoulders pattern. It does look that way, doesn't it? Especially if you keep this line right here. It's kind of a mutated head and shoulders, right? You got this left shoulder here, the head, and now it's forming the right shoulder. Yeah, it certainly does look that way. Let's hope not, because if it breaks down below 358, I might be in a little bit of trouble on my position, but I think we'll be okay. If you look, this Bitcoin chart is just looking absolutely fantastic right now. The all-time high, according to Bitstamp, is 123,236, and right now we're at 122,793. So we are very close to an all-time high here, about $500 away. And given the momentum, it could definitely get there. And this does start to paint an even better picture for my hypothesis. Like, is 250 off the table? Nope, it's not off the table. Anything is possible. Markets can move in weird ways. It's a head and shoulders until it breaks below. Yeah, right. Well, we can call it any pattern we want until it breaks down below that one. Let's see. Steven says, maybe people are just selling their stock positions and buying Bitcoin direct. Possibly. Bitcoin is ahead of the gang. Absolutely, Rob. 100%. It's great to see what's going on right now with Bitcoin, but I hate to say this, I'm even more bullish on Ethereum. I think that the math behind Ethereum has changed dramatically. And I know in the past I was talking about Ethereum on how I was kind of nervous on it, right? I wasn't that confident on Ethereum because they weren't fixing their scaling solutions. But in the markets, quite often, it's not what you do, it's what people perceive about your company. And in the case of Ethereum, the market is looking at Ethereum saying it's the most decentralized, or one of the most decentralized layer 1 blockchains that allow programming. It has the network effect, which means it is got the biggest reach. It's being used by institutions. So, JP Morgan's using Ethereum. There's a lot of other companies using EVM, which is Ethereum Virtual Machine, compatible blockchains, which means they can all connect to Ethereum. So it's like all roads lead back to Ethereum in this case. More importantly, if you look at the chart of Ethereum here, so let's bring up Bitcoin, or let's bring up ETH here real quick. I'm glad you didn't, Big Ab. I'm glad you didn't. I kept it, but I'm happy I kept it, but I was fairly close as well. So Ethereum, I measured the performance. Actually, when I did the class this morning, we were up 239%. It's actually up even more than that now. right? We're up 243% in the last 126 days. That is far better than anything else in the market, right? You find me something that's moved up 236%. Now, why is it? The reason is, again, institutions are using Ethereum. They've chosen Ethereum. And my argument when I was telling you guys why I'm nervous on Ethereum is they're not fixing their scaling solutions. They can only handle 15 transactions per second. And here's Solana doing 65,000. Night and day. However, it seems like the industry is looking at the same arguments that I made. The main argument was that Solana is still somewhat centralized. It's not as decentralized as Ethereum. Ethereum is massively decentralized. And while Ethereum may cost a little bit more, you have safety, security, and decentralization, which is value to any business, right? Here's where it took a change. I was expecting Ethereum to fix its own blockchain and say, go from 15 transactions per second to 1,000 to 10,000 to 100,000 transactions per second. Maybe this is an act of brilliance on Ethereum's developers' part, but they have chosen to slow that down. And what they've done is they have now created functionality on the Ethereum blockchain that make it easier for people to build a layer 2. Think of a layer 2 as literally a second level where all the transactions happen and they just report down to Ethereum. So Ethereum becomes the record keeper of everything, and it's safe and it's secure. But you remove all the transactions, the stress of like millions of transactions, you take that off of Ethereum and you put on the layer 2s. So Base, which is the layer 2 solution that Coinbase has created. Coinbase wants to create tokenized futures. They want to create all of their products on their Base application, and that plugs into Ethereum. They've chosen Ethereum. Robinhood's doing the same thing. So we're seeing more and more institutions choose Ethereum as the record keeper for all of their transactions. And to me, that adds tremendous value. And that's one aspect of why I'm a fan of ETH at this point. The second one is we can all look at MicroStrategy, right? Mr. And here is Michael Saylor and MicroStrategy buying boatloads of Bitcoin, billions and billions. In my Trump voice, billions and billions of Ethereum. Or Bitcoin. No one knows Ethereum or Bitcoin like I know it. Look, he's buying billions of it. And if you hold Bitcoin on an exchange, you make no money. The only way Michael Saylor makes money with Bitcoin is if the value of Bitcoin goes up. And he's leveraging by borrowing against it. But he can't take that Bitcoin and make money with it. Here's where I think Tom Lee, or I think that's his name, Tom Lee, does a really interesting thing. So we look at BMNR, and there's not an opening still, hold on. There's another one out there too, but let's look at BMNR. So BMNR is now becoming an Ethereum treasury. It's doing the same thing that Michael Saylor and MicroStrategy are doing, but not with Bitcoin. They're doing it with Ethereum. And here's why I'm so unbelievably bullish on Ethereum. I've brought this up many times. Michael Saylor is buying Bitcoin and he's keeping it on Coinbase. He's keeping it on Fidelity. He's not putting it in private wallets. So it's on an exchange. It's part of the liquidity of the marketplace. So it doesn't help the price of Bitcoin. If he wanted to, Michael Saylor should take all that Bitcoin off the exchanges, put it onto a private wallet where he controlled the keys, and the price of Bitcoin would go absolutely parabolic. We would be at $250,000 by the end of the week if he took it all off. Why? Because his Bitcoin is sitting on Coinbase, on Fidelity, and customers are able to buy and sell from that pool of liquidity that he has created. If you take that liquidity off the exchanges, I told you not to buy BMNR because it looked shady. Let me explain why I'm changing my stance here. I'm not buying BMNR. But I'll tell you why I think Ethereum treasuries could do extremely well. So if he took it all off the exchanges, he removes all of that liquidity. So any customers of Fidelity and Coinbase looking to buy Bitcoin don't have access to that massive pool of over 600,000 Bitcoin. So here's why Ethereum is a much more interesting idea as a treasury. We can take Ethereum right now and go stake it, and that would earn you 3%. So if we have two assets, you've got Bitcoin, which I can buy and hold, and I only make money if it goes up and down. If I take Ethereum, I can take that, I can stake it, and now I earn 3%. So the Ethereum argument, excuse me, gives me a 3% advantage. I have a 3% advantage right now because I can take my ETH and lock it into the protocol. And this is where it gets interesting. When you lock your crypto into a staking protocol, meaning you stake it, it's no longer part of an exchange. It's no longer part of that liquidity, which means it's no longer part of the circulating supply. So if you have something like BMNR, who let's say buys $1 billion worth of ETH, and they stake it to earn 3% on that $1 billion for the year, which they will get, they're taking $1 billion worth of Ethereum out of circulation, literally removing supply, and they're locking it in the protocol, which means it's no longer part of the circulating supply. So if we make the argument that supply and demand are what drives price, what these ETH treasuries are doing is they are removing Ethereum from the market. They're locking it into essentially a vault that you can't access. You can't buy or sell those. They're off the market, right? And I'm hoping you guys see that this has a twofold effect. Number one, just BMNR and other Ethereum treasuries buying Ethereum is going to drive the price up, right? They'll drive the price up. But when you realize that it's actually taking that Ethereum and removing it from the market, saying, nope, you can't buy or sell this stuff because it's locked in this vault, that's going to have a profound impact on the price of Ethereum going forward. Not to mention that you also have the adoption because of Coinbase, base layer. You also have Robinhood coming out with their new layer. There's a lot more. Mick says, can't ETH just print more supply? No. It'd have to be voted on by the community. Right now, I haven't checked, but I'm pretty sure it's still 2 Ethereum are created every 15 seconds roughly. And that's part of the code, right? That's part of the mining validation rewards. So to me, this is why I think you're going to see much greater price appreciation for Ethereum going forward than Bitcoin, because the more treasuries start up with Ethereum, the more likely they're going to stake it and remove all of that from supply. What are your thoughts on Solana? Well, Solana could do something similar. All right, I haven't heard of a Solana treasury yet, but what could happen is someone could start a Solana treasury, buy Solana, lock it, and stake it in the network, just like with ETH, and basically, I think you can get about 5.5% right now on Solana as your rate of return. So they could get 5.5% on it. And again, same story as with ETH, because it's proof of stake. When you take that Solana and stake it, it's removing it from the market. It's no longer on the shelves for people to buy. In contrast, all of Michael Saylor's Bitcoin is on the shelf for people to buy, right? It can be used by Coinbase or wherever he's custodying it and keeping it. They can use it for whatever purposes they want. That's why I think this is such an interesting model. Now, to Dr. Bonnie, going back to BMNR, this is not a recommendation to load the boat on BMNR. I'd much rather buy Ethereum itself than BMNR, because I don't know how BMNR is set up. I don't know. I don't trust it. I don't know exactly what they're doing. How do I know? How do you know that? Which part, Mick? Sorry, which part? Can ETH just print? Oh, as far as how do I know that you can research it. The protocol for Ethereum right now is 2 ETH every 15 seconds. That's the validation reward. It's been that way for a long time. And they could vote to change that, right? Oh, how do I know about MicroStrategy's Bitcoin? Because it's public knowledge. If you look at the SEC filings by MicroStrategy, he says it's kept at Bitcoin at Coinbase and Fidelity. He says he has the keys to some wallets, but my guess is that's probably held at Coinbase and Fidelity. So it's in his the filings he makes with the SEC that some of it's kept at Coinbase, some of it's kept at Fidelity. And because just like if you keep your money in a bank, Mick, your bank is not going to just keep that money. They're going to lend it out. They're going to do business with that and try to grow that money. And I think that it's no different for what's going to happen with these cryptocurrency exchanges, which is why I always encourage you guys, get your crypto off of the exchanges because it's part of the liquidity pool. All my Bitcoin, all my ETH is off exchanges. Don't let them have access to it. Especially should something happen to those exchanges, right? If Coinbase has an issue or Kraken goes under, your money's gone. Now, I'm not sure. I saw the conversation talking about Coinbase. from a staking perspective. You used to be able to stake Bitcoin, or sorry, stake Ethereum on Coinbase. I don't think that you can. Let me go back to simple mode here and see if I can find it for you. I don't think you can anymore. Where's the earn? Yeah. Let's see. Earn ETH. See what it gives me. No. You used to be able to, and it was like 3%. So let me go home here. And there's a portfolio. Again, I don't keep much on this account. It's just not for me. There should be something at the bottom, like what you can stake. So staking, see payouts. So I had some Cardano, obviously I got rewarded for, but staking rewards, yeah, unfortunately, just Cardano is all I have here. So I'm not sure what the ETH one is. I looked in the past and they said you could no longer stake ETH on Coinbase, and maybe that's changed. I'll have to dig into that one. What will happen to ETH when it hits all-time highs? It'll keep going. I mean, we're pretty much there. If you look at ETH's chart right now, look, again, it's supply and demand. And if the industry is kind of demanded that, if the industry is saying, hey, we're going to use Ethereum, we're going to build our own applications for our markets. And that could be, Amazon could do the same thing. Amazon could create an app that tracks all their transactions, goods and services, their stablecoin and everything. And they create that layer too, and they plug it into Ethereum. And why would they do that? They would plug it into Ethereum because Ethereum is now getting most of the business is saying, well, Solana's fast, but we want to be where all the big businesses are because that allows our tokens and money to be interchangeable. So if you have Base, which is Coinbase's project, which is a layer 2 and plugs into Ethereum, you could swap Base for whatever Amazon's is as long as it's on the Ethereum blockchain. So it's interoperability as well. And I think most businesses are going to now start looking more at Ethereum. So yeah, I'm in the very bullish camp on Ethereum. Big said, yes, they used to stake it on Coinbase. I don't keep anything. Yeah, as you shouldn't. Then why would Saylor do this? There's no upside for him. I think that, honestly, I think Michael Saylor has some sort of relationship with these companies, Coinbase and Fidelity, to custody it for him. He's not doing the right thing. Michael Saylor is so adamant that Bitcoin is the absolute solution. What he should do is he should literally, you guys have seen me show you the site many times, but let me just look it up. 1 second. If you go to largest Bitcoin addresses, what Michael Saylor should do, and this is what I think the government should do as well with our Bitcoin strategic reserve. You scroll down here and you can see there's a wallet right here. This 34XP4V, I'm not going to read them all. There is 248,000 Bitcoin sitting here. That's a value of $30 billion. $30 billion. Now, if Michael Saylor was to open up a wallet account and put all of his Bitcoin in it, you'd see like 611,000 Bitcoin sitting there. What that means is all of that 611,000 Bitcoin, which is sitting on exchanges, being lent out to other customers, fractional reserve lending, is now removed from that. And all these exchanges, Coinbase and Fidelity, would be scrambling to try to buy to make up for the shortfall because they don't have all that Bitcoin. I'm pretty sure that Michael Saylor has some agreement that he cannot take that. They'll give him good deals. They'll probably give him a very good deal, but you cannot take it off the exchange. That would be my guess. And why would Coinbase put that provision in? Let's say I've got 200,000 Bitcoin at Coinbase. I'm Michael Saylor. I got 200,000 at Coinbase. If I just, and Coinbase is taking that Bitcoin and actually literally giving it to customers. When they say, I want to buy a Bitcoin, they're just using that, right? And they're using transaction fees from it. If I take all 200,000 of my Bitcoin off the exchange at once, there's going to be a huge hole at Coinbase of they don't have enough Bitcoin. So ultimately what happened is Coinbase would have one of two choices. Number one, they would have to default because they just don't have all that money to fill everybody's accounts with the paper Bitcoin they're supposed to have. Or number two, they go to the open market as quickly as possible and buy as much Bitcoin as possible. And we know what would happen there. The price of Bitcoin would double. In a matter of hours, we would see Bitcoin's price double the moment he takes that off the exchange. So my guess is it's a terms and conditions piece for MicroStrategy that says you can't take it off the exchanges. You have to keep it here. And he's like, whatever. and again, this is all assumption. So, I don't know 100%. This is speculation on my part, but Michael Saylor is so bullish on Bitcoin, it does not make sense for him to not keep his own private keys. Now, there's another one out there called 21 Coins. This is, the guy's name is Jack Mahler. He's another orange pill Bitcoin guy. They actually publish their address and say, here's our wallet, here's our Bitcoin, we control it. That to me is much more appealing than what Michael Saylor is doing. Every time we see him post that he bought another $3 billion worth, I'm like, where the hell did you get that from? I'm not buying it. So anyway, sorry, I'm on a rant. We're going to take my show too long. That's what I mean. He's literally holding down the price of Bitcoin. Yeah, Stephen, he is. Do they can loan it out? Yes. So Luis, it's rehypothecation. And because I believe there's just no real clear rules on this, I think Coinbase is rehypothecating funds. They're taking a deposit and saying, okay, we'll if a customer wants to buy some Bitcoin, we'll give them a little bit of this account. If you read Broken Money by Lynn Alden, that's initially how we got fractional reserve banking, is gold. Gold was deposited with these bankers. And the bankers were like issuing loans against the gold because they knew the customer's not going to come get their gold. The customer just wants a safe place to keep it. So what happens is the bankers would issue pieces of paper and say, okay, well, here's this note, you owe us X percentage, and now they're earning interest on that gold that customer is keeping there. The only concern, because it's collateralized, right? The only concern for the banker would be if the customers came and said, I want all my gold right now, all the customers. It'd be a run on the bank. We could theoretically have a run on an exchange. If Michael Saylor says, I want my Bitcoin off now, which is why I'm pretty sure from a security mechanism, Coinbase and Fidelity have made sure that he can't do that. Otherwise, it'd be catastrophic for both these exchanges. So Saylor is staking his Bitcoin. No, Mick, you cannot stake Bitcoin. Bitcoin is proof of work. If it's proof of stake, you could stake it. So he's not making any money on his Bitcoin. He's just keeping it there as custody. That's all. Now with Ethereum, you can stake because Ethereum is a proof of stake network and you get about 3%. Saylor could just take off 20K Bitcoin per month, let Coinbase know in advance. He could. And trust me, the market would find out about that probably within, a couple of months. Because there's a lot of data sources that would be tracking, 20,000 Bitcoin coming off the exchange repeatedly to different addresses. And exchange Saylor gets good pricing when he purchases Bitcoin. Yeah, I think so, Margaret. I mean, how am I going to incentivize Michael Saylor to use Coinbase, which gives us value, and keep his crypto there? Promise him great security and give him a great deal, right? That could still happen with gold and it could. Hey, look, one of the things that irritates me most about this whole campaign that with Elon Musk and President Trump was, you guys might remember in January how they were adamant, we're going to audit the Fort Knox, we're going there tomorrow, we're going to check it out. That has completely disappeared as a story. I think what happened is they went to Fort Knox and opened the door and was like, uh-oh. Now we can't tell the American people this. we don't want to let them know. That'd be chaos. So anyway. Oh, weird stuff. Huh. Oh, I guess my background moved. Sorry about that. I'm moving stuff around over here today. All right, I'll sync all this up later. My screen got all wonky. Sorry about that. Gold and Epstein files are both lost. That's good. All right. I know we went on some serious tangents there, but let me real quickly answer this question from Mark because it's an easy one. Mark says, I've never traded options before and I don't know where to start. Could you give us a crash course on how to begin the process and basics of getting started? Any resources or steps that you can recommend would be appreciated. I'm usually not on live, but always watch a show after a few hours. Look, I'd say get an education. There's a ton of different education sources out there. Obviously, I work for Trading Academy, so it would be remiss if I didn't plug our options course. One of the nice things about it, Trading Academy is you can retake those classes as many times you like on a space available basis. We have on-demand, we have physical classrooms, and multiple instructors help teach you. So for me, that's the fastest way to learn is from people who are actually doing it. I don't know if I necessarily trust YouTube videos. There's a lot of YouTube videos out there, but I like structured program content where everything is covered as opposed to somebody who might be good at one thing and bad at another. Thanks, Steven. He says, oh, Mark, options totally changed my trading. Yeah, it's, I mean, every time I talk to people who trade and like, oh, I don't trade options, I'm like, wow, you really are missing out. You know, it is so flexible. It is so flexible. Yeah, talk to Lisa. Yep. You know, one, and the classes are expensive. It's expensive, but you also get a lot for that. You get community, you get all kinds of added resources and live classes and online and retakes. And to me, that's where I would get started, Mark. And you could learn some of the basics by just, basic options courses. But I think a hands-on program where you're actually getting your hands dirty in the market is the best way to go. All right, that was it. Updates to trades. Let me do this real quick, and then we'll try to wrap up. So, MicroStrategy, my average number has dropped even lower. I need to update this number because it dropped by $5.20. But here is the current positions I have on. So I got the MicroStrategy 410 calls expiring this Friday. I did sell some CoreWeave puts today. That was, and I saw earlier, I think someone else did. I think that was you, Steve, CRWV. So CoreWeave had a pretty ugly earnings announcement. I sold a bit aggressive. I sold it's kind of wild. I sold the 105s for $1.90 today. So I got almost 2% for 2 days. Crazy. 2 days. And if you look here, I'll put the number on the screen at 105, and you guys can see why I chose 105. Let's go 105. Okay, so there's the 105 strike price. And you can see why, right? That was kind of this major turning point that happened back here in late July. I really have 2 days. I've got Thursday's trading session and I have Friday's trading session for CoreWeave to drop another 11%. And because of that, I'm getting paid 2%, almost 2%. To me, I was like, all right, I got to take some chance there. So I sold 10. I've got 10 on that one. I wanted to do more, but I'm like, it's fine. I don't want to take too big. This is catching a falling knife in a big way, right? This is pretty aggressive sell-off. Steve sold the 110s and the 105, but you sold for next week, right? Fury, that's such a great comment. He says, education is expensive, but ignorance is devastating. Yep. Oliver, I don't think it's going to, who knows? CoreWeave, their numbers just weren't as what were expected, but their growth in the company was great. They're tied at the hip to NVIDIA, and I think that's, no circle, no silver. I didn't do any circle. There's your circle today, down 6.15%. I still am in the bearish camp on Circle. Even though their numbers were fantastic, it's like the math is simple, right? These guys are taking $65 billion, buying treasuries that are paying you maximum 4.3%. So the highest rate of return they could get on that $65 billion is 4.3% from a legal perspective. Pretty easy to predict their earnings. It's not like they're coming out with a brand new chip that's so revolutionary, right? They're just buying treasuries and cash deposits. That's it. So yeah, I not touching Circle again. I lost $6,000 on that bad boy. I'm done with it. I won't touch it again. Silver? No, the rates of return on silver just aren't that great. I'm very long-term bullish on silver. I have been for a long time, and I was trading a lot of silver last year and earlier this year, but no, we're good. You're getting 4%. It doesn't make sense. Exactly, Steven. That's why Circle just doesn't make sense to me. And maybe they're doing different business relationships and there's some income streams there with how they're setting up infrastructure. I could see that happening. But any thoughts on today's bullish IPO? Yeah, I think it speaks volumes to cryptocurrency and digital assets, right? It's now another cryptocurrency exchange backed by one of the biggest billionaire investors, Peter Thiel. Bullish. As a BLSH? Yeah, BLSH. There's your opening day of it, which is just ridiculous. I mean, that's just absolutely crazy. We had a high price intraday of $118. I don't know what the original strike price was. Do you guys remember? I thought it was like 38. I'll have to check it out for tomorrow, but this is hype. This is absolute hype for a new company. Yeah, there's a pattern if you drop it to a 5-minute one. Yeah. Is what? It was a wild day. I think it halted. No, it doesn't look like it halted. We would be able to see dashes if it halted. So usually when it halts, you'll see like little dash marks where it just paused. It looks like it actually did okay. I don't see any halt on this one. It looks like it started about 31 minutes into the trading session. But yeah, I believe, let me real quickly look here. What was bullish initial strike price? Let's see, what was price? I forgot what it was supposed to be priced. I thought it was 38. $37 per share. So here's the interesting thing, and this happens all the time with these pump and dump things. Drives me crazy. You can see here it says the expected range is between 32 and 33, right? 32 and $33 what it was supposed to come out. It started, they raised it to 37 right before it went public, and the first trade that happened on this was 95. So it's already triple its initial price, and that just tells you that this is well hyped, well marketed, but I think it's a good thing from the perspective of more competition in the exchange space. And I do like that Peter Thiel is behind this. He's connected on the high hill with everybody, and he's really pushing more and more in that digital space. I won't touch this for quite some time, right? I'm not going to mess with this probably for 90 days until they get the unlock period. Right now it's up another 10% in the after hours to $74, but yeah, wild stuff. All right. Does Trading Academy have a chart platform? I've not looked or use it. It depends, but usually it's TradingView in the classrooms. All right, I'm going to wrap it up here before I go any longer. I don't want to do an hour show, but here is your dailies. I'll run through the top few, and we will wrap up. So our 10-year yield dropped 1.24%. It was looking nice yesterday with a gap up, but we saw a pretty big decline today. And then it really starts to, I'll go to this one. Here's crude oil. So crude oil, I did not make any trades on crude oil. I told you I'm a little apprehensive, and I think I may be proven right on why I'm apprehensive, right? Because it looks like we're just about to break through this low on crude oil at 62.17. Dollar index was slightly down. It's right to our trend line. Oh boy, that's not good. Remember, the government wants this thing lower, and they have the invisible hand, if you will, of government. NASDAQ was 5th place. All-time high, all-time intraday high, but it's also kind of a little bit of a shooting star there. Gold up 0.27%, nothing technically. 3rd place was the S&P 500. Again, all-time high, all-time intraday high. Smaller range, but still very, very, very bullish. And Russell, man, has just been screaming for 2 days straight. Hallelujah. 1.96% up today for the Russell, but the king of kings, Bitcoin, and that chart looking really good. On the future side of things, we did make an all-time high today for Bitcoin, and we shall see how it goes going forward. Let's look at your economic calendar because tomorrow is a big day. Thursday brings you the PPI numbers. Now, we had a decent CPI number. Tomorrow, they're expecting our producer price index number to jump from 0 to 0.2%, a little bit of an increase there. And that really is your only major piece on the economic front. Let me bring up your earnings calendar here, and then we'll wrap up the show in under 1 hour. Dang it. So close, yet so very far away. All right, here's your earnings calendar. Let me bring this bad boy up. And for Thursday, August 14th, you've got, no, that should be, okay, here we go. Applied Materials, JD.com, Deere & Company, NetEase. That's pretty much it. Amcor. But yeah, that's it. Not a lot of big names out there. Yeah, absolutely, Rob. Strongest one is definitely Russell 2000. So that's going to do it for me. We're almost back to an hour show. We're at 58-minute show today. Hope you guys enjoyed that. I will see you all tomorrow. And again, for those that sent in questions, I appreciate it as always. That was Mark and Judy and Les and Jim. Thank you for your questions. If you have something you want on tomorrow's show, let me know. I got a really busy day tomorrow, so I'm not sure how much I will be able to get it all prepped, but I'll do my best. Just email me at tradermerlin@gmail.com or put it down below the YouTube. I will see you tomorrow. Take care.